Welcome to the next video within this lesson. In this video, we will be covering top-down analysis and what exactly it is and how to use it to your benefit in trading. As we know with trading, looking at the charts, we have multiple different time frames that we look at. Starting out from the high time frames such as the weekly, daily, the 4-hour, and working all the way down to the 1-hour, 30-minute, and 15-minute. As we know, the higher time frames are more accurate within the markets and the charts. So the higher the time frame, the more accurate your setups are going to be. With top-down analysis, all we're doing is looking at the higher time frames that we use, such as the daily and 4-hour, and working our way down the time frames, going to the 2-hour, the 1-hour, and 30-minute, and so on. With doing this, we can get the bigger picture of what's happening within the markets. We can see the overall market structure looking at the higher time frames. Now, it's extremely difficult to be able to find profitable trades just by looking at one time frame. This is why we have top-down analysis and multiple time frame analysis, just looking at multiple different time frames. Most traders will have 3 to 4 different time frames to break down the charts by, whether that's the daily, 4-hour, 1-hour, or if it's the 1-hour, 30-minute, and 15-minute, and possibly the 5-minute charts. We can use top-down analysis to help us see market structure on different time frames. Looking at the bigger picture overall, it's easier to see the bigger picture on higher time frames, and it's also going to be more accurate, so you're more likely to get more trades right. Let's say you want to trade on the 4-hour chart. You have to look at the weekly chart and then look at the daily. If the weekly and daily charts analysis align with the 4-hour chart, you can take the trade and decide if you want to actually add it in your trading plan. If you want to take a trade on the 1-hour chart, you have to look at the daily first, and then look at the 4-hour. This is a critical step to do as a price action trader because this will help you avoid low probability trade setups, and it'll allow you to stay focused on the high probability price action signals. Through our top-down analysis, we will start with the bigger time frame as we look to gather more information, such as the most important resistance levels and support levels. These areas are more accurate as they're on higher time frames, and they're representing key turning points within the markets. If you can identify them on the weekly chart, you will know what's going to happen when price approaches these levels on the 4-hour. The main key takeaways with top-down analysis is top-down analysis starts with the widest lens of analysis rather than starting with like the smaller lens. You want to look at a wide analysis over a narrow analysis and get the big picture. Let's take a look at the charts now and look more on top-down analysis. All right, so let's dive into the charts and look down on some top-down analysis. So as we can see on the charts, we're looking at GBP USD on the daily time frame. So just pulling it up with the top-down analysis, remember, you're going to start at the higher time frames and move your way down. Whether that's the weekly, daily, 4-hour, then 1-hour, then 30-minute, 15, you want to look at the higher time frames and look at market structure. So starting out, let's just zoom out just a little bit. And what I'm going to do here is pull up my trend lines. I'm going to start drawing trend lines. So we could say we have one right here. I'm going to actually move it down to here because that lines up more accurate with the touches and the lines. So we've got our trend line here. Let's mark up some zones. As we can see, we have a zone here. Pretty strong on the daily. Now here's a cool little tip for you guys. When you got your zones button or your rectangles button up, just come to clone, this button little here, squares, and click clone. All it will do is clone your rectangle or zone. That way you don't have to come over and draw it every single time. You can just click clone, bang. Now all I'm doing is kind of just marking up different zones on the daily time frame, and what we're going to do with top-down analysis right after this is move our way down. So let me grab this zone real quick. I'm going to keep marking it up, finding new zones, finding new trend lines. I like that zone right there. Now here's one thing. As you guys can see, I have my zones marked up as yellow or a gold color. Here's one thing that you guys can do. If you notice stronger zones and stronger trend lines, come and make them thicker or make them a different color. So as we can see, this seems like a pretty strong one. I'm going to keep it zone or yellow. This might be a little bit weaker, so what you can do is come into colors, and make it either brighter, or I would suggest make it lighter, or even change it to a whole new color. This is something that I do, is I like to change it colors because it shows me it's a weaker zone. It's more likely to get broken. Unlike this strong zone where it's very strong and price will most likely get rejected off of it and not break it. This is something that I also do on different time frames. So as we're on the daily right now, once we move down, I'll change the zones I have to maybe blue or green because it shows me that it's on a different time frame. Now you can also come in here, quick little tip, go to the settings wheel, and you can change your visibility. So if you don't want the zones to show up on the 1 hour, or the 1 minute to 30 minute, you can change that here. If you want it to show up on the 1 hour or 2 hour or 4 hour only, you can change that here. If you want to take it off daily, you can do all of that in your settings right here, your visibility. You can also come into coordinates. If you want to extend your zones, like we taught earlier, just type in 00, 00, and it'll move your zones. So we went all the way. Now come over here and type 00, type 00, and watch. See how extended that zone fully all the way? That way you don't have to always be moving it up. Now you can also come in here and change your style once again, real quick. All right, but looking at it, in top-down analysis, we're looking at the daily. So we would assume when it reaches this zone, we're gonna buy, just like in this example. Now we also have a trend line here. We're gonna look at it and look for a sell here. But let's move down, see what market's doing to catch the smaller movements on the smaller time frames. So as you can see, the market's set up a lot different now that we move down. Let's kind of move back a little bit. So let's just take a look right here. So as you guys can see, we have our break of this zone. Oh, my bad. We have our break of this zone right here. I don't know why it's... There we go. We have a break of a zone. We kind of have our correction, and then we have our continuation. Right here, we can kind of see a flag forming. Right here, going back over here, we can see that we're hitting the zones. So instead of looking at that overall bigger picture, because sometimes it is hard to see, we can dive down and do top-down analysis and find the little movements right here. So instead of looking for the overall movement that you see from this zone to this zone, you can come in here and find more zones that you'd find profitable trades on. So as you can see, this is a zone. Now, like I said, I'm gonna come in here and change my colors on it just because it's on a different time frame and it'll help me see it better. So let's do red for this example. Click OK on that. Now with top-down analysis, we started with the daily, so we are expecting price to move from this zone all the way to this zone. But as you can see, I found a couple more zones within here. So once we see a breakout of this zone, we're expecting that push up. But if we see a breakout to the downside, we're expecting that downside movement. This is where we can find our continuation patterns set up within the markets. So say we're looking for, we've got a trend line right here. Let's just put on right there. That's a little rough, I know, but go back. Now with top-down analysis, we know that this trend line's confirmed right here and here. But as you can see, we see a breakout of it. So with this right now, we're seeing the impulse down, the pullback, and then we're going to see the drop down all the way to this zone. That's what we're expecting in the markets. Now, we can drop down to the 1 hour now with top-down analysis and see what's going on even a little bit closer. Because obviously this whole range from here is 1,000 plus pips. That's going to take weeks to form. And obviously we all know that we don't have weeks to wait for a trade, or most of us are only going to hold it for a couple days, max. So moving in a little bit more using top-down analysis, we know the overall direction of the market. We think the overall direction using top-down analysis is going to move like this. So this is why we're looking for sells in this general aspect, because we know we're expecting the market to drop down a lot. Now, the market might be dropping or push up just a little bit to reject off this trend line again and then see the push down. So this is where we have to wait for our confirmations. something like that, or a good reversal signal that would form in the markets within here. Let's jump to another pair and go over top-down analysis a little bit more. So now we're going to look at Euro USD. As we can see, using top-down analysis and just starting with the 1 hour, look at this channel we have forming right here. Also a very, very strong trend line and downward move now down. So right here, what are you expecting? You're probably expecting a drop more in the market, and then or possibly waiting for the breakout to the upside, doing something like that, breaking out of the channel. Let's move up, do top-down analysis in the reverse order. So as you can see, we're still in that. We could probably have a stronger trend line right here. So in the previous time frame on the 1 hour, we weren't able to identify this trend line. So now if price does do one of these movements up, we could expect price to get rejected and stop off of here since we're on a higher time frame. Now let's back out to the daily and see what we see. Wow, see how this is a really, really, really big move down? I mean, it's a channel and a trend that is just really strong in the downside. So this is something that we necessarily wouldn't even want to look for the buys just because it's so strong to the downside. And remember, the trend is your friend. You're going to want to agree with and go with the trend. So in the lower time frames, we were expecting buys. We actually want to catch sells here because that's the overall, that's the overall trend that we're looking at. Now, obviously, you're going to see the market move like that and have your movements up and down and just kind of do stuff like that. But overall, for safer trades, we're looking for sells because it's overall in a downtrend here. Now, remember, we can come and find zones when looking at top-down analysis that's going to help us. As you can see, it looks like we've broke a zone, and I'll zoom back in here in a minute. That shows us that we're going to continue to the downside since we've broken on a higher time frame. Let's move back down on the 4 hour time frame. See how we've broke the zone? So now what we could actually expect to happen in this specific trade is a retest to the zone and a movement to the downside further, just because the overall trend on the daily is to the downside. Now, bumping it up a little bit more or bumping down to the 1 hour, we still could expect something like this, like I said. So this is where we're in kind of a time frame where we're just going to kind of want to wait and see what the market sets up and what happens. Because I personally think in this example, we could see a break to the upside, break out of this zone, retest, so your impulse, your correction or pullback, and continuation to the top side of this channel. Remember, we couldn't find, or this trend line, we could not find this trend line on this 1 hour, but on the 4 hour, we can see how accurate that trend line is. So this is a place that we would be looking. Look at that. I mean, this is a place where we could see the market go up to, but we're gonna actually see a rejection to move to the downside. So this whole move is your impulse, then we'd have a correction, and then we'd have our continuation. And if that happens, let me back out to the higher time frames now. Let me get rid of some of this so you can see a little bit clearer. Oops. Let me get rid of some of these lines real quick. Impulse correction. So remember, here's what we're kind of looking for in this specific example right here. We're looking for that overall movement to the downside. So right here, we have our impulse. We expect a correction up to this trend line and then continuation to the downside of this channel. Once we see that, we could expect something like this happen. Impulse, pullback or correction to the zone, and then continuation to the top side. So as you can see, it all plays in. So we're using channels and trend lines and patterns and all of it in top-down analysis. With top-down analysis, we want to start in the higher time frames and work our way down. See the overall bigger market structure in the bigger picture. It'll help you set up and find more accurate trades that form within the markets. Always start and use top-down analysis. If you're trading on the 1 hour, look at the daily, the 4 hour, and 1 hour. If you're trying to trade on the 30-minute, look at the 4-hour, 1 hour, and 30-minute. And then if you're kind of even doing it a little bit lower and trying to trade off the 5-minute, which we don't recommend, look at the 1 hour, 30-minute, 15-minute, and then 5-minute. That's kind of going to wrap it up for top-down analysis. If you have any questions, please ask at any time, and you can now move on to the next section.